Welcome back to Curious Commerce. Topic Fund Flow Statement Part 6. Today we will discuss about a schedule of changes in working capital, gross and net working capital. Dear learners, gross working capital and net working capital, many things that both are same, but remember carefully they are related but not identical. Understanding this difference is very important for understand the concept of fund flow statement and real business analysis. We will clearly understand today about the meaning of gross working capital and the meaning of net working capital. And finally, we should identify the key difference between them. First, let us understand the gross working capital. Gross working capital means the total of current assets of a business. That's very simple. Gross working capital is equals to total current assets of the business. Current assets include cash, bank balance, debtors, inventory, and bills receivables. Gross working capital shows the investment in current assets and short term asset strength, but it does not consider the liabilities. Now, let us understand the net working capital. It means the excess of current asset over current liability. Net working capital shows the short term financial health, liquidity position, and ability to pay short term obligation. This is why it is more widely used in financial analysis. On the base of the meaning, gross working capital means total current assets, net working capital means current asset minus current liability. On the base of the nature, gross working capital is absolute concept, net working capital is relative concept after deductions. On the base of the focus, gross working capital focuses on investment in current asset. Net working capital focuses on liquidity and solvency. On the base of the usefulness, gross working capital useful for working capital management and asset planning. Net working capital uses for the liquidity analysis, fund flow statement, and financial health check. In most accounting problems, working capital usually means net working capital. Remember this, it saves marks. Let's revise quickly. Gross working capital means total current assets. Net working capital means current asset minus current liability. Gross means investment view. Net is related to the liquidity view. So learners, now the difference between gross and working capital, net working capital should be crystal clear. While preparing a fund flow statement, the first and most important step is schedule of changes in working capital. Many learners find this confusing, but actually it is very simple. In this session, let us understand the concept clearly. The first question is, what is the schedule? The schedule of a changes in working capital is a statement that compares current assets and current liabilities of two accounting period. Usually we compare previous year and current year. The main purpose is to find whether working capital has increased or decreased. The second step is how we prepare it. The process is very systematic. First, we should list current asset for both the years. For example, cash, debtors, inventory, and bills receivable. Then the list out the current liabilities for both the years, like the creditors, bills payable, outstanding expenses, and short-term loans. Finally, we should calculate the working capital for both the years with using the formula working capital equals current asset minus current liability. Then we compare the 2 years. If working capital increase in working capital. If working capital decrease in working capital. The simple example, suppose. Now let us understand an important concept, increase in working capital. Working capital increases when current asset increase or current liability decrease. Let us understand this step by step. Remember the basic formula of working capital. Working capital equals current asset minus current liability. So naturally, if assets go up, working capital goes up. If liabilities goes down, working capital goes up. Very logical, right? Suppose a business collects money from customers. Earlier, debtors were rupees 50,000, cash was rupees 20,000. Now customers pay their pending dues. After payment, debtors decrease, cash increases. Total current assets remain healthy and cash position improves. This strengthens the working capital of the organization. Now let us understand the opposite situation, decrease in working capital. Working capital decreases when current asset decrease or current liability increase. Once again, basic logic using the same formula of working capital. Working capital equals current asset minus current liability. If assets fall, working capital falls, right? If liabilities rise, leads to working capital falls. Simple and logical. Let's quickly revise it. Increase in working capital leads to asset increases and liability decreases. Decrease in working capital leads to asset decreases and liability increases. Remember this, very important for understand the concept of fund flow statement. So learners, now you clearly understand increase and decrease in working capital with real business logic. Today's session we discussed about the schedule of changes in working capital and gross versus net working capital. In next video we will learn about the increase and decrease in working capital. Please like, subscribe and share. If you need the daily updates about the financial markets and real business truths, follow WhatsApp channel Curious Commerce Financial Management Hub. Thank you all.